Okay, just recently I made a decision to buy some shares in Cheesecake Factory, and I just want to share with you the thought process or my mind map that I went through to come to that decision to buy Cheesecake Factory. So, pretty much in every time I'm looking at a stock or evaluating a stock, I'm always focusing on answering these particular questions about the business. And if I find that if I'm able to have a comfort level with these particular elements or being able to answer these questions, I should have a pretty good idea of whether I'm going to go buy or sell the stock. So let's take a look at these factors, these questions in the context of evaluating Cheesecake Factory. So the first question that I usually ask myself when I'm evaluating a company is, what do they do? What's their business? What do they sell? What products? What services do they sell? What is their value proposition? So in the case of Cheesecake Factory, essentially what they sell is food. It's a restaurant, but what they're selling is essentially indulgences, indulgence and decadence. So just as the name implies, Cheesecake Factory, you think they'd sell cheesecake, but they just don't sell a single type of cheesecake. They sell like 20 different kinds of cheesecake, and they're not just little, small little pieces of cheesecake. They're very large, and what they're known for, and what distinguishes them for the restaurant is their portions are very large. So if you just order a hamburger and fries, you're just not going to get a little dorky hamburger like you would at McDonald's. You're going to get a monster hamburger with all kinds of stuff in it, and you're going to get a big pile of French fries. Other thing they're noted for also is the selection. If you look at the menu at Cheesecake Factory, it's almost like a textbook. They're known for a lot of selection, extensive selection, and almost over 200 items in their menu. So it's quite elaborate. It takes a bit of time trying to figure out what you would want. So they cater to all different kinds of tastes and palates. It's really the place where obesity goes to be born, because of this just element and this decadence, this indulgence, this over-the-top kind of desserts and fast food kind of thing. It resides in Cheesecake Factory, and that's their big claim to fame. In terms of who they compete with, well, Cheesecake Factory is probably, you put them in the space kind of in the fast casual space, and that's where you would find restaurants like Buffalo Wild Wings, like Panera Bread, maybe, or a Denny's, because they do cater to the breakfast crowd also, or brunch crowd. So that's, those are several of types of restaurant chains they were. They're not definitely competing against a McDonald's or a Burger King or a Wendy's kind of thing. They're competing against more established kind of sit down restaurants. So who goes to a Cheesecake Factory? Who are their customers? Well, there's three real kind of types of customers that would go there. First one is families. Again, just the nature of the menu offering. There's something for everyone. Just because of a large selection, it's pretty easy to cater to any different kind of taste. And it's a very family-friendly oriented places. The environment is just inviting for kids and families and large groups. It's a very positive kind of environment to be in. Another place is really group is known for is the single crowd, and it's really a place, it's a date place. It's a place you would take somebody on a date, and maybe for dinner or maybe after dinner for the dessert, for the decadent dessert. Sharing desserts. Desserts is a bit of a nice pastime. And tourists. Cheesecake Factory is very well known around the world, but it's not everywhere around the world, and so people, when they hear about it, will gravitate to it. I know in my case, I went to one in Honolulu, and it was on the main kind of touristy area, tourist strip in Honolulu near Waikiki Beach, and it was just mostly tourists hanging out there. Vegas, same thing in Vegas, same principle in Vegas. There's one on the strip. So those are customers, and the question is, will they come back and buy it? one of the things you want to know about customers is great, they're going to go there, but are they going to come back? And again, chances are they are going to come back. If you just look at this traffic, the store traffic, the restaurant traffic, there's always a wait. There's always a waiting list, and there's always long lines to get into this place. Sometimes it takes almost like an hour to get in there, but people are willing to wait. So that kind of tells me that, you know what, people will be really like the brand, really like the selection and the food offering, and they're willing to wait for it. So that's great. Seems like a really great place, really good place to hang out, good vibe, everything. But the bottom line, as we're investors, is does Cheesecake Factory make money? So when you look at it from an economic profit perspective, which is I look at, which is about looking at companies' return on invested capital. If you look at back in the last 3 years, their return on invested capital has ranged between 17 and 24%, which is amazing because restaurants are pretty much low margin businesses, so you really wouldn't think they would generate high returns on capital. But this Cheesecake Factory is one of the few real solid companies out there that generates a really solid return on invested capital. When you compare it to their cost of capital, which comes in around 11%, tells me is that this company is creating positive economic profit, which means they're creating tangible wealth for their shareholders. So this is amazing. This is pretty good performance considering the fact that the restaurant business has really been in a bit of a downturn. If you go the last couple of years, restaurant sales have had a really rough time. And the stock prices of restaurant companies have had a really rough time too. But Cheesecake Factory has, from a financial performance perspective, has continued to generate and crank out pretty good returns and pretty good financial performance. So that's a positive thing to look at with the company. Now let's look at their financial position. Let's look at their balance sheet. What is the quality of the company's assets? When you're looking at it, they have an extremely strong balance sheet. And the basic takeaway is they have zero debt. They have no debt. So basically they can fund a lot of their expansion internally, which is great. They're not dependent upon other external sources of financing. Low tangible assets, very low intangible assets. And from a liquidity side, they're pretty low, but their current ratio is below 1, slightly below 1. But when you look at their cash flows, free cash flows and cash flow from operations, it's very solid. It's very healthy. So from this perspective, when you look at the financial position and the balance sheet, no debt, strong returns on capital. This is a type of company that I could see getting taken over at some point. This is the type of company that would appeal to a private equity kind of business where they could buy it, lever it up, and try to max out, crank out an additional shareholder value. So again, financial position looks good. Their company's making money. Customers are loyal following. Really unique value proposition, consistent value proposition. What else? What could threaten this? What could threaten Cheesecake Factory? Well, one of the things about Cheesecake Factory is their restaurants, their location of the restaurants. Most of the restaurants, they've kind of made a decision to put a lot of their restaurants in malls, in a mall kind of format. They're not necessarily standalone restaurants. They're integrated in a mall in some format. So, and we know that the whole mall format is just been under attack because of they'll shift to online sales, and the whole Amazon impact has been there. We've seen the concept of gas prices falling, gas prices have been relatively high, which again prevents people from going to malls. Disposable income going down, healthcare costs, especially in the U.S., healthcare costs going up. Just the amount of disposable income potentially not available could limit people from going fairly often to a Cheesecake Factory. Another element that could impact the company, as I said, tourists are a pretty significant component of their client base, and given all the stuff that's going on in the U.S., we could see downturns in the amount of tourists coming to the U.S., which could ultimately decrease foot traffic in the company. So one of the ways to alleviate that risk is to expand. And one of the things that they're trying to do is expand their footprint globally. They're opening a Cheesecake Factory here in Toronto, where I live, and I know they're looking at other parts of the world too. They're looking at an Asian presence also there. That's another side of it too. Now, going back to the mall principles, again, the fact of the matter, they've located themselves in malls. Malls are kind of becoming a little bit passé in the sense, but the kind of to mitigate that risk, what they've been doing, and this has been in a way it's a smart move, is they've been going into really prime real estate, in the sense they're in areas that are cater to higher income. These are, sell luxury type goods, and so they're in spots where people with higher income will walk through and will see it, and they have a greater propensity to want to stay and eat at a Cheesecake Factory, given where they are. They're not located in kind of low Class B, Class C kind of property. They're in kind of Class A real estate, Class A type malls. So those are some of the risks that are out there and that the company is trying to mitigate. So at the end of the day, it comes down to, okay, now that's great. It seems like there's some really good. It seems like a really good story, but as investors, we got to ask ourselves: is the stock cheap? Is it a good entry point right now where the stock is? So earlier in the year, the stock was pricing in at about $60 a share, and over the last while, it's dropped to almost as low as sort of in the 40s. It's in the mid 40s. And it's down almost 12% in a 1 year period. Valuation on the company, I've seen valuations putting the stock at about 49 to 59. And it's definitely cheaper on a relative basis to its competitors on a PE, if you're looking at a multiple ratio. So right now, stock is cheap, and it's had a bit of a pullback recently, and that's kind of what got me interested in looking at the stock. Is the stock has come down quite a bit, almost 25% since the start of the year, and I thought, okay, maybe this might be a really good entry point. Let's see if any of the fundamentals have changed. Recently, the company has reported slightly lower earnings, and their outlook has been lower, but the company still continues to generate positive economic profit. It's making money, and it's making money in a pretty down cycle of the business with respect to the restaurant industry. So when I looked at all these factors, I looked at the fact that it's got a really unique value proposition. It's got a very loyal customer base that's willing to come back, and it's a sticky customer base. I look at the fact that it's financially performing really well, still really well. There might be some hiccups right now, but it's performing well in a bad market. So imagine if the industry kind of kicks up and the people get more disposable income, economy gets better. This is only going to get better. Financially, the company is pretty strong. It's got zero debt, strong cash flow from operations, very low intangible assets. So the quality of the company's financial position is really strong, and it seems to be cheap. So when I put all these elements together, I thought, you know what, this seems like to be a pretty good, solid, high-quality business. It's got a loyal following, and it sells a popular product and service at a modest price point, and it seems like it's doing it. So ultimately, when I took all these factors together, I decided to buy.